Okay, so we're going to revise what happened on 12th of March market and then we will learn something. But before that itself, I want you to see this chart here. Okay, let's look at this is the Dow Jones chart. Okay, guys. Now, Dow Jones chart from here, let me just bring it in for you. Okay. So yesterday we saw the market opens here, right? And then after that, suddenly it just basically shoot up to this point. Now, why is that so? Because that is the KCB level. Okay, guys, take a look here. I want you to take a look here. So if you move your mouse over, the closing price is 41. The closing price itself, the opening price itself is 41,924. Opening price are 924. Okay, so that is the KCB level. KCB level. Okay, and that means that when the market was trading around this area here, okay, opening price here, my target was there, 41,924, because that is the nearest KCB that we have. So like I said earlier, you just have to put it there. Whether or not the market triggered that, that is not important because if it hits, it's just extra bonus. And some of you have caught it actually yesterday. So you can see what happened in the market. The market was sideways and then was moving towards up. Then the news came out from the CPI data. Now, what is scary is the way the market opened. You see, I mean, 0.3% to 0.2% is good, but I mean, the point is this. Then why didn't it gap up? Let's say, why didn't it gap up here? Why didn't it gap up here? Why didn't it gap up here itself? Why didn't it gap up here? Why did it gap up exactly at the KCB level? This is why I say, guys, our technique, our system is really, really, out of this planet. If you just do your homework, all right, do some little, thinking through, you should be able to do something like this. Okay. Now, what I want to show you is not only the KCB that it gap up and then it got triggered. Do you notice that once it hit the KCB, couldn't stay above the KCB, the market paused almost instantly. Yes, I want you to think about this. Go and try on the black and white chart and draw the KCB. And you will notice that when the market doesn't hit KCB but doesn't stay above KCB, things happen. Recently, I did a class on AKS class and I already shared a student on how to do it. I think they have already found the idea and are doing it. So today, I'm just sharing an insight of you because it's not fair for them who has paid it to get from right now. So but then you got an idea. If you know idea, you just try on your own, you will see the point. So this is really incredible stuff. So that means that Kel, are you telling me that today we can still use the KCB and then everything? Yeah, as long as a fresh KCB you can use. So give a guess. Today the fresh KCB will be here. Now the opening price of today is 41,480, right? So this will be the opening price of yesterday's market was 480. So that will be the KCB target for the Dow. So the Dow Jones, if you see go up later on, it has to cross 41,480 for it to really go up itself. Only if that happened, then the market can follow through. If it doesn't, then the market will face some resistance, which you can see at the moment is happening right now. So the same concept, you put it on gold itself, right? Then you understand my point. Okay, so you see, now on this very day, gold basically open, close here, right? Okay, so the next day we buy gold when it's above OP. And when we bought gold itself, right, we target the target 2911. Why? Because this is the KCB target. This is the fresh chocolate bar target. Can you see that? If you can see that itself, right, everyone? Okay, you can see that, press number 8 right now. If you can see why is that a KCB, then no, that number 8. Okay. Okay, yeah. So got it? Okay. So if that's the case itself, right? Do you notice that after that there's no more available fresh KCB for you? Because they're all being utilized. So that's the reason why I think today or tomorrow, I don't know this part of this week, sorry, today or tomorrow, last 2 days already, we will see 2952. Now, why is that so? Because that's the KCB target. This number is 2952 KCB opening price. So if gold stays above the today's opening price or tomorrow, 2952, in my opinion, will be triggered. Okay, so that's why I want you guys to come online to listen to me. Of course, again, if the gold doesn't go down, doesn't go up, sorry, then of course you need to just put your stop loss accordingly. Yeah, but then if not, it should be fine. So 2952 will be a very good level for all of us trading the gold market. All clear? If all clear, press number 9 right now. Okay, another thing to watch out for today. Let's talk about the yesterday's market. Let me bring it to you to revise. Okay, let's talk about the Nasdaq. Now you notice Nasdaq yesterday, there was a very strong double bottom, double diamond right here itself, just before the market rallied. You see that? Interesting, right? And after that, obviously, if you follow diamond trade was good, but there's one little thing here. There's a 4 diamond here. Do you see that? So the 4 diamond, it was actually for this guy. So I draw a line here itself. So when I draw the line, right, I saw the market moving up. Okay, I saw the market moving up. Then all is good. But before I want to trigger, right, the market U-turn and break below the line. And the market comes with that. And even though the KSI was green at the point, but the market reversed below the line. So I went in short here itself. Now this short is above OP. So you may ask a question, if I short here itself, then is that I'm breaking the rule? No, do understand this, okay? Follow through trading, right, is when you buy above OP. Follow through trading is when you sell below OP. That's called follow through trading. When you do swinging itself, right? Swinging is that you are definitely a sell above OP with a stop loss here. Swing trading for buying is that you buy here itself and you put a stop loss here. So this is the difference between the follow through, okay, follow through and swing. Okay, sorry, my handwriting. Okay, so for swing, right, when I did it was a very simple way. I just basically wait for the market to reverse itself, and then after that, I put a stop loss where? Now I put a stop loss here, my friends. I shorted here. So I shorted somewhere around here. My stop loss put here. So this is my X. Can you see that? So when the market goes down to somewhere around here, right, I already earned about 3X already. That's where I book my profit. You understand? So the market continue to fall all the way to OP. If I held on this trade, I will make 6X or more. But this doesn't matter. The thing is you're using the diamond to advantage. So diamond trading itself, right, doesn't mean it's meant for buying. A lot of people keep on thinking diamonds for buying. No, diamond is for long and for short at the same time. Okay. So if the market has a diamond, it's supposed to go up, right? But if you reverse course, it will go down. That is how it works. So same thing, if the market has a diamond, then if you stay above the line, it's a buy. So you don't need to be confused about how come got diamond at the bottom and no diamond on the top. Because the diamond, the way we utilize it itself is just a single line to differentiate the long and the short. All clear? If all clear, press number 10 right now. Now, some of you ask me, Kel, can you do a class on the diamond again in the weekend where all can follow in? Yes, I'm considering to do that. Maybe this Saturday or this Sunday. I need to check with my CEO, aka my mom, my wife, so that I know that what to do with my arrangement. Yeah. Okay, so let's check the market one more time for gold yesterday. Let's go through the motion for gold yesterday. Now, yesterday, gold ding dong, ding dong, ding dong, ding dong, ding dong, ding dong, ding dong. I tell you this, I understand it's very painful yesterday. Gold was sideways for a longest of time. I understand this. Some of you say, Kel, I go in, come out, go in, come out, I lose money. Well, if you look at it carefully, if you just basically use a diamond to trade, you will have okay lah, not say very well, you will not be hit. But if you trade, I use OP to trade, right? Then maybe yesterday trading OP, it'll be hit. That one, I can't help it. If the market don't want to move, there's nothing I can do, my friends. Nothing I can do. Okay, so what happened here? Now, this is the MA30, MA, yeah? So I think yesterday, was it Jennifer or Jacqueline? Yeah, y'all call for the MA, right? So when the market was coming down and it triggered the MA30, right? Straight away, y'all posted it. I was away outside, but I saw that message. Quickly, I went in to buy. Huh? How come? Because you see, the market hit the MA and then rebounded, right? So the thing is this, my view is either like this or like this, ma. You understand? When the market hits the MA, there's only two outcomes, either go all the way up or go all the way down. So what I did was that I take a bet. I believe that it's going to go up. Why? Because the KSI was green already. That is a telltale sign. The KSI was green, the KCX was black, That was good enough. Okay, then came the diamond. With the diamond was the blue diamond that come out first, right, which is here. So I draw the line across it. And when I draw across it itself, you can see the market just refused to go below. And I know that this is the OP of the day, jackpot. That's where I went in to buy gold. And again, my TP level was pivot 1. My TP level, because KTR plus 1 was not given, I take my TP level. So I got 2 profit level here. Then I aim at the KTR plus 2. Why? Because the market stays above the KTR plus 1. Well, you can see the market stays above KTR plus 1. So that's why we book profit. You see that? So because of all this itself, right, that's how I traded in gold. But of course, you say, KL, wow, luckily you got experience. No, to us who have no experience, we caught here itself. I mean, I can be honest with you. If I have traded too, I would have get my house hit. But I also tell you yesterday that CPI data is coming out, right? And I said CPI data is going to be very interesting. So maybe watch it first. And that's the reason why I say that. Okay. So nowadays, if the gold now is near the all-time high, you have to go slow. If you don't buy, then like pull back in to go for it itself. Okay, all clear? If all clear itself, press the next number, number 11. Now today I do a bit more revision with you so that you guys can really capture this and trade better, so that you guys will know what to do. Okay, all right. Now this is the Nikkei. I know that a lot of you don't trade the Nikkei, but I want to share about Nikkei to you. So you see Nikkei on when it opened itself at 36,557, and the MLP already very nearby. So once the market touched the MLP and stay up, it was a buy. And straight away, I know that the market will go to this KCB. Why? Because this is the nearest KCB available. And of course, one thing to know, why do I know the market will rebound? If you look at the KCX here as well, you can see this is the KCX here. This is the here that there's no KCX there. So the market has came down, but the market is retreating upwards. So straight away, I know that as long as the market stays above OP, we have a market bottom. Understand? So this is how you use the indicator to make money. It's something similar to MACD, but we have a very prominent green flashing area. All clear? If all clear, press number 12 right now. Now, I really want you guys to really put effort in understanding the KCI, the KCX, followed by KSI. These two combined together, you will know what to do in the market, especially crazy time like this, okay? All right, so with the Nikkei on my table, this is how I traded the Nikkei for friends. So first thing first itself, the market straight away pump up, and then KTR 1, 2, 3 were all given. And once KTR 1, 2, 3 is given, anywhere here itself, right, I will tell you don't trade lah, because the market already given the KTR 1, 2, 3 already. So it's only later on when the market goes above KTR plus 3, for the fun of it, I draw this one, and the price goes up. There's a stack diamond, I draw this. Now at the start, I thought it's going to go down. I shorted here, but immediately when it opened up, because of the CPI data, boom, it went through. Okay, so end of the day, the market went sideways with a big wave, but at least, if you follow through the opening price through, you will make money on the Nikkei market. All right, so Hang Seng is still the same. Hang Seng now is downtrend, but the KSI was green, so I know that market likely will be going higher. Okay. All right, one thing to note, guys, the gold trade itself, I want to bring the attention to you on gold. Yeah, let me bring gold to you. Just a quick one on gold. This I forget to explain this to you. Okay, hold on. Okay, for gold, I repeat, gold, the elephant trade is no longer available because already the KSI switched color. So once the KSI switched color, the elephant trade earlier itself, right, we thought that gold will come down, right, will no longer be valid. Okay, no longer be valid. This is very, very important. And that's the reason why I say, guys, when you trade elephant trade, you have to see what happened and what happened next. All right, then if not, the market may change positioning, and then they may lie to it. So of course, now they wanted to sell, not going to buy. That's why I think that the market today to hit here itself 2952, the probability is really, really high. Okay, all right, guys, that will be all for today's sharing. Today's a bit longer than usual, but I think it's very important. Please revise, and of course, if you have any question, please post in the group chat. That will be all for today. Thank you very much. Bye bye, guys. Thank you.